Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hey there, this is Michael Blank, and I'm your instructor today on today's REI's Classroom. Today we're going to talk about how to pay yourself when you purchase an apartment building. And this is a little odd, but I'm assuming that you're going to be purchasing apartment buildings with other people's money.
This REI Classroom real estate lesson is sponsored by UglyOpportunities.com.
And that makes you a syndicator. Syndicators put together deals. Or almost, I wouldn't even call them real estate investors. I call them real estate entrepreneurs. Entrepreneurs make stuff happen. They find money, they find deals, they find managers, and they put the whole deal together. Okay, that's what a real estate entrepreneur does. And you get compensated for that. Now, whether you put in your own money or not, you are actually compensated for that. And most people don't know this. And when they do find out about it, they start feeling guilty, and they feel guilty about asking their investors, and they kind of say, well, I'm going to pay myself something also. And they feel like they don't deserve to be paid. And let me just, so before I talk about how to pay yourself, let me just dispel that a little bit of why it is totally reasonable to pay yourself throughout this process. So when I bought a very small 12-unit apartment building, I paid myself $15,000 at closing. That's 3% of the purchase price. Okay, so 3% of purchase. Let's say you're doing a slightly larger deal. You're doing $1 million deal. You're paying yourself, like $30,000 acquisition fee, which is paid to you at closing. Now, why would an investor agree to do that? And here's why. First of all, if you have this deal under contract, that means you've probably looked at, I don't know, somewhere in the neighborhood of 100 deals. And maybe even you went and drove there and spent 2-3 hours touring a deal. You've made phone calls. I mean, if you calculate your number of hours, you're probably working minimum wage by the time you get this deal under contract, okay? So there's a lot of work that went into, number one, finding this. Number two, not only did you find the deal, but you brought together people who don't know themselves and brought their financial resources together to enable you to do this deal so that they can all make money, okay? So you worked hard to expand your network, bring the people together. And number three, you negotiated the deal, okay, and you put property management in place, and you're running the place, and eventually you're going to sell this thing all to make money, okay? So you deserve to be compensated. Without you, the investors would not make any money at all. And an investor who puts up a resistance to this after you try to help them understand that this is going on may not be the right person to take money from. Look, you got to be on the same page as the investor. If the investors, why would you bust your butt to make something very profitable if you're not being compensated fairly for doing so, right? So if the investor wants to make as much money as they can and you're not being compensated in the same way, why would you bother, right? And the investor has to understand that the more money they make, the more money you make, okay? On the other hand, if they don't make any money, maybe you don't make money either. That's fine too, okay? There's no reason that you need to be making money and everybody else does not make money. My point is you have to be on the same page. And you deserve to be compensated. And so there's three ways to pay yourself. One is upfront. We talked about this acquisition fee, which is paid at closing when you purchase it. And it's normal somewhere between 1% and 3%, and if the deal allows for it. Number two is while you own the asset. Sometimes this is called an asset management fee, and there's different ways you can structure that. You can have it be a small percent of the income, a small percent of the equity that was invested. Different ways to do it. The point is you are being paid while you own the asset and as you manage the asset. Number three is when you dispose of the asset or when you return the principal to the investors. So you can have one or both. So for example, if you refinance in 3 years because you renovated the property and you return all the principal to the investors, you can pay yourself a fee of 1 or 2% of the loan amount or of the valuation at that time, or when you sell it. Okay, so that's called a disposition fee. And those are all reasonable fees, and and you also, of course, get equity in the deal. So you're going to get between 10 and 30% equity simply for putting the deal together. So this means that you get, after you pay your investors their returns, you get to share in the profit and the upside as well, right? So all these are 4 different ways you can make money with syndicating deals, which makes it so attractive, even if you don't put your own money in the deal. That's how you're compensated. Now, if you put your own money in a deal, then you're also treated as an investor. Okay, so if you want to know more about raising money and structuring deals, I do a free ebook on this, and you can get it from themichaelblank.com right there on the homepage, and that will give you some more information about structuring deals and raising money. So hope that was helpful. And please be sure that to compensate yourself fairly when you do deals. It's only fair and reasonable, and what makes it fun. All right, you guys, enjoyed it, and I'll see you next time.
HomeVestors, the We Buy Ugly Houses folks, is a franchise system of hundreds of real estate investors that have purchased over 65,000 houses. If you'd like to learn more about the most powerful real estate investing system in existence, whether you're a pro looking to take your business to the next level, or whether you have no experience at all but a burning passion to be successful in real estate investing, please visit flipnerd.com/ugly to learn more. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of flipnerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of flipnerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at flipnerd.com. Please check out the FlipNerd family of real estate investing shows, where we host 4 great ongoing shows at flipnerd.com/shows, or simply search for FlipNerd in the iTunes Store.